why don't we get started, and just how about with introductions? Everybody just tell the crowd where you're coming from and what you're up to, yeah? And we'll just start right here at the start of the line with Lawrence, yeah?
Sure, thank you, Pete. So Lawrence Tilli, managing partner at NetZero Capital. We're an early stage venture capital private equity firm based in London, primarily focusing on DeFi and Web3 applications, and been in the space 5-6 years prior, working on central bank digital currencies, some fund management stuff, and very active in the London community.
Perfect, thanks. Elle?
Hey, morning guys. My name is Elle. I'm an investment director with Digital Strategies. The fund has been investing in the space for quite a few years. Our founders actually bought Bitcoin from some guy at McDonald's back in 2011. We invest in across everything, but I would say this year we've been focusing more on gaming. And we also have our own guild, and so I think games enjoy speaking to us as well because we have some guys in our team who really know gaming very well.
Hello, I'm Leland. I'm an investor at Galaxy's venture team. Galaxy is a kind of a crypto investment bank. We have many different arms that do anything from trading, market making, all the way to mining Bitcoin and venture. Our kind of bread and butter in crypto is infrastructure investing. So what this means is kind of financial infrastructure that enables crypto companies to sell to institutions, and then infrastructure on the scaling side. And we do everything but gaming, unfortunately.
Hello. Oh, that's quite loud. My name is Nikita, so I'm partner at Fasanara Digital. So I'm heading the market neutral fund, which was started 4 years ago, which is one of the largest liquidity provider in the space. We do a bunch of market making, a bunch of activity in DeFi. And we recently launched a VC fund where we are looking to partner up with projects, invest in them, support them in a native Web3 way.
Hi everyone, I'm Jocelyn. I run Luno Expeditions. We're an early stage investor in fintech and crypto startups globally. We're part of both Luno, which is a sponsor, so hopefully you guys know Luno, but it's a mass market crypto wallet. It started in South Africa. It is now in 40 different countries, has about 10 million users, and Luno was acquired in 2020 by DCG, the digital currency group, which on one hand owns and operates crypto businesses, so they own CoinDesk, Genesis, Grayscale, Luno, etc. They also have been investing in crypto startups since 2015, so I've done over 200 investments in early stage startups. And so, long story short, they decided to consolidate their early stage equity activities in Luno Expeditions, and so we have a scale investment strategy. About a third of our investments are actually in fintech with no explicit crypto angle, but we launched in March, have done 33 investments, and look forward to doing many more.
Wonderful. Thanks, everyone. Where we're going to start is with some of the lessons learned from the last year. And I invested in 9 Web3 startups through Techstars back in March. And we put them through a 13-week accelerator program, and now working with them on the fundraising side, which obviously gives us a lot of insight into where the market is right now and how things are looking. But what we brought everyone here today was to hear about these views from our investors here. And Elle, let's maybe start with you. What do you think over the past year that you've seen in the market where you've learned a few lessons about, about what to look for?
So when looking at teams, one thing I've learned is that, especially in this space, teams need to be able to ship fast, right? As we all know, 1 week in crypto is like a month in the normal world. And if the team isn't able to ship quickly, well, of course, maintaining good developer practices, then somebody else will come and eat your lunch. So I think that's quite important. Secondly, of course, a strong community is a very, very powerful thing. So the difference between, say, marketing and a strong community is that marketing is very brand-led or project-led, while a strong community is very member-led. So the members are actually pushing your project forward and rooting for you, right? So I think a very good example of this is, for example, Treasure or Magic on Arbitrum. So they've got a very, very strong community. And what this means is that they're able to get people to come and build with them or on them without any financial incentives, like no grants, nothing, just because they're aligned with their values.
Makes sense. I like that. And you're right about the difference between building community and also doing the marketing. right? I see community going hand in hand with fundraising, but you also have to handle that different aspect of marketing alongside community. It's a great point. Leland, what have you seen over the last year?
I think over the last year, I've continued to realize how cyclic crypto is. I got into crypto in roughly 2014, 2015, and at that time, we saw a lot of like Bitcoin forks come around. And then come 2017, we saw a lot more like applications being built. And I thought at that time, like, okay, we have the chains, we have applications, we're like, good, or there's going to be more applications. But come around again in 2018, we see like people investing in new L1s like Solana and Near. And it's like, okay, that was unexpected. And then we see this happen again now in like 2022, where we see a lot of like move-based chains. So you see a alternation between people investing in new chains to create more block space, balanced with investment in like new blockchains. New applications. And I think right now, we just saw a really large wave of layer one investing with a lot of move chains around. And now we see slowly like a huge amount of investment into the move ecosystem. But a big question we always ask ourselves is like, what is enduring versus what is ephemeral? Because if we look in 2015, 2017, a lot of things that we thought would persist, like have ceased to exist now.
Can you pull on that a little bit, the enduring versus ephemeral? When we talked about that last week, I thought it was pretty salient observation. And we just dig into that a little bit?
A lot of the times in the past, when we look at projects, we try to understand like where does it fit in the future. And sometimes we have some sort of like expectation of what the future will look like. But then many times the future will change or some new technology comes around that makes something irrelevant. And I think that those are the moments where we have to spend a lot of time in thinking about like what are all the different pathways into the future and like how could this company potentially fit into it. And sometimes like companies are not enduring because the technology doesn't necessarily make sense, or maybe the founders were only crypto curious instead of crypto engaged or degen or whatever term you want to use.
Right. I gotcha. Yeah, no, I know what you mean. And with where technology is going, right, and just take the metaverse topic for a second, in that for the metaverse to truly come to life, messages move through fiber optic cables right now at the speed of light. To be able to send a message from New York to Tokyo while you are in a virtual 3D world with a 10 to 20 millisecond delay at best, speed of light moves between New York and Tokyo at 45 milliseconds, right? So we're not there yet. Over the course of the next, if the metaverse arrives in the next 10 years, we're going to need some big quantum leap in some true fiber optic technology to get there. And that technology that, isn't yet in place, there may be people building on that in the next 3 or 4 years, or 5 or 6 years that don't even exist yet, right? So, I mean, there's a ways to go.
Yeah, and another example is like early this year, people thought DAOs were going to be the future. Like, oh, like we take any application, we like DAOify it, governance done by the community, and then turns out people like me are inherently lazy, they don't want to vote because voting is too much work, and so you had a huge rush of like DAO tooling investing, and now like these companies are kind of like floating around, not having product market fit, because it turns out people don't want to vote, don't want to really engage, it's a lot of work.
Yeah. Lawrence, when you and I first met about a year ago on the other side of town over lunch, we're in a much different place, right? What have you picked up on over the last year with your investing that is painting the picture for how you think about investing in Web3?
So I suppose for me, I'd really surmise it to timing being critical. I suppose this kind of overlaps with what both Elle and Leland said, in the sense, both the ability for founders and projects to ship fast, but with more Leland's point, timing within where the market is at. What we saw throughout the last cycle, towards the back end of it, was a lot of volume and liquidity moving between different L1s. At the moment, we as a funder standing by to wait and see which L1s get traction at the moment. There's at least 10 new ones coming to market that we're watching. But the pace of innovation in this ecosystem far outstrips at the moment the growth in user figures. So I would say, at the moment we're waiting to see, watching developer accounts, wallet signups, but waiting to start redeploying until we see a critical mass in one direction for any one L1 ecosystem.
Yeah, that's interesting. I was looking at an interesting stat the other day that daily active users of MetaMask, they're about 30 million. That is a drop in the bucket in terms of the global population, right? We got a long way to go.
Very long way to go.
Yeah, very long way to go. But for all of us here, this is completely normal, and this is a space we live in. And so, great. We're all using a different type of crypto wallet. But yeah, there is a ways to go. Jocelyn, looking at it from your angle of the way that you're investing, what are some of the things that you've seen over the last year?
Yeah, I mean, I like this term, crypto curious versus, I don't know, let's just call them degens, right? Like, I think there's a lot of people who, especially earlier this year, were crypto curious and trying to enter the space with X to earn, or throwing a token at it and being like, our marketing strategy is the token. Incentives are aligned. We're like, that's not a business model. That's not an actual strategy. So I think there's been just not a lot of. We've seen a lot of cases that don't actually make sense to deploy on a blockchain. I mean, it's time consuming. It's expensive. To make sure that it really makes sense to have Web3 underpinning your business. Do you really need a token? Do you really need a token now, or do you need it further on once you have more liquidity and more users in your platform? So I think one thing that we're really trying to discern is, the use cases that actually need a blockchain in which it actually makes sense. There are a ton of those, of course, in which it makes sense to have a smart contract. It can cut out rules of like notary publics. It makes a lot of sense for some cases, but it definitely does not make sense for all cases. Do you need to pay with your coffee at Starbucks via Bitcoin? Like, is that really going to drive, like the adoption of Bitcoin? Like, is that really, necessary, or is it perfectly fine to pay with your credit card at the moment? Should we be focusing on the cases in which Web3 will actually make a huge difference versus those real incremental changes?
Yeah, or you could use your crypto exchange's credit card, debit card to pay for coffee at Starbucks, and Starbucks gets fiat currency, but you end up that coming out of your crypto account, right? So, there's different ways to do this, but yeah, I agree. I mean, the monetization of real world use cases for crypto has very much been driven, in my mind, over the last year or so by stablecoins, and just seeing more and more of that connected to the infrastructure, and that starting to build some momentum around the world. Nikita, looking at your view, and I know you like to take a more macro view of things sometimes, maybe just share your thoughts or what you've seen over the last year.
Sure. So we wear a couple of hats, and so it forces us to be, I guess, a little bit shorter driven and be like a bit more on the contrarian side, because we've seen like too many of these Ponzi-nomics pop up over and over, which are just elaborate, almost like schemes where some perverse incentive structure is embedded, such that those that come in, they stand to benefit, and the last guy always holds the bag. So it polarizes my view on the crypto. On one end, I just love it, and there is so much exciting stuff that's going on. But then on the other end, I'm just trying to look for like real world applications, and you read the A16Z reports, you hear about how somebody's ability to transact in some third world countries is enabled through crypto, and all of that is great. But then as you look at kind of day-to-day projects that you keep interacting with in DeFi, for example, it's obviously seen like a stellar growth, which is like really, really impressive. And there are like huge innovations that teams at, be it Uniswap or Aave or other ones, keep on shipping, keep on working, keep on pushing the boundaries of what's possible. But at the same time, just because it's so easy to come into the repo, to fork it, to tweak one or two things around, and in the bull market, it's so easy to just raise a bunch of money. So this creates this game theory interplay, which forces you to be again like just taking a compound of changing a few things here and there, raising that like really big valuation, and then like flopping like 3-6 months in. And I think a lot of these projects just cannot really exist in any state of the world, pretty much, other than price is skyrocketing, and every single boat is lifted with a tide. So that forces us again to be the cynic in the room and look around and look at these private rounds, look at the public tokens, and see and ask ourselves, like, what is the adoption for it? Like, what is the health of the project? What are the volumes? What is the distribution of owners? What is the on-chain health of the project, which you can get with block-by-block updates, which is really, really cool. But then again, like, as you zoom out, be it NFTs, be it DeFi, be it other things, eventually it's actually pretty centralized. A bunch of these things, again, they're permissionless and all that, which is super cool. But still, some players, they absorb a lot of power. Be it Celsius in DeFi, which was running a lot of money. And they were like huge percentage of DeFi, or be it other projects, with all the bribe, curve wars, and all these things. It's just the power in the end is centralized to some capacity, just like we've seen with these votes on some of these protocols. There is like a lot of stuff that's going on, but the way we view it is it's an experiment. You don't know what's going to fly. So many projects on NFTs, for example, because it's nice domain to look at because they're quick for feedback. It's like they launch within 2-3 months, you already see the results. Yeah. And so we've seen the players that you wouldn't think that they should succeed, but they actually become the winners. For example, Yuga Labs. I don't think people would have bet on them and think pre-fact that they stand to become what they became.
Gotcha. That makes a lot of sense. I mean, before we move on to looking at what's ahead of us now, one of my biggest lessons learned from the last year is that with the 9 startups that we brought into the accelerator program, each one of them I saw as having a strong potential to raise via token. This was back in March. And that was because when we selected the 9 companies, we did so on the basis of, do we see incentivization at the core of their value proposition? Do we see the ability to build a token around that incentivization framework? And is that something that we can typically get to market with the value proposition overall of each one of those Web3 projects? And obviously, as we move from March through to June, the floor fell out of the token market. And what was interesting was that all of the lessons learned of each one of these individual Web3 projects, they saw an opportunity that, well, hey, we are at the beginning of our journey. We are not decentralized. We are not a mini economy. We are not a big network. We are an operating company. And operating companies generally have P&L. And those types of companies generally raise an early round through equity. So what I'm working on with each one of these 9 projects is who are the equity type investors out there right now that would invest early days through a safe with a side letter for tokens down the road. That's something that we're working with a lot of different people on. I know that we hadn't talked about this before, guys, but does anyone want to maybe take that context of the difference between investing in tokens versus investing in equity? Jocelyn, I know you have a view on that, but maybe start with you and perhaps get a view from others as well if anyone wants to take that.
Yeah, so my team only invests in equity at the moment. We do token warrants, we have done SAFs as well, but we have a separate team at DCG that only does tokens. And the reason we split it out a bit is just exactly what you're saying, Pete, is when does it actually make sense to launch a token? I think it's when we look at early stage companies, frequently they have to build out, if it's a marketplace, they have to build out liquidity. If it's if they're starting something from scratch, they have to have a marketing strategy. And the pure reliance on the token as a method of building out your community, as a method of marketing in the absence of other strategies, we think is just difficult to discern how that's going to work from day zero. So frequently it makes more sense to have a token a little bit later stage in the game. We're definitely not saying it doesn't make sense to have a token. We're just saying, from day zero, launching a token is a bit tough. And so we have a different team that looks at those tokens, which are a little bit, later stage in the project. And I think it's actually been a lot of shift actually in the market recently towards earlier stage equity and token warrant as opposed to before's token from day zero.
Good point. Lawrence, I think you had an idea on that to share?
Yeah, I mean,
I know Leland did as well, and we'll come to you next.
We invest both in a mixture of equity and tokens. I will say our portfolio is slightly heavier towards the token side. I mean, in terms of what we're looking for moving forward, and I suppose this does tie in, slightly on this concept, is we're really looking for applications that will onboard the next billion users. I mean, as we've just discussed, there's 30 million MetaMask users today. Now, within that, some of the applications that we are quite excited about use or have tokens inherently, within their business model. Some of these have been applications. I mean, Sweatcoin's one which many people probably will have heard of over the last few weeks, that has very successfully ported users over from Web 2 into Web 3. And they've done this quite seamlessly, introducing a Web 2 app. They had equity investors on board from the start. I think the app had 100 million downloads, up to 13 million active users, and they only introduced the token this month, actually, over in NearCon. There was a big launch party for it. So I think with models like this, it's very important for there to be a strong circular token economy, and this is kind of very in line with one of the core fundamentals of Web3, which is allowing users to reappropriate sovereignty of their data and monetize that. So, applications such as this, in some cases, X2 earns, in this case, a sweat economy, whether it be an attention economy. We looked at a very interesting mapping play recently, which is, akin to Sweatcoin, but allowing Uber drivers or anyone in a vehicle to use their live location to provide live map data feeds. So, the ability of a token to operate within a strong circular economy here and allow users to monetize their data and reappropriate or take sovereignty of that is something we're looking forward to. And if that has the ability to subconsciously port in users from Web 2 over to Web 3, then that's really exciting for us.
Awesome, I get it. Leland, you had something to share on equity versus tokens, yeah?
Yeah, this will be fast. But as investors, obviously you want to have both because you don't really know what things will turn out. But the colloquial question we always ask ourselves is who is going to rug who? Are token holders going to rug equity, or is equity going to rug token holders? Which we have seen in the past, right? We've seen companies issue tokens, we're we're going to be a DAO, but all the fees from this exchange will actually go to equity holders. And as token holders are okay, we don't get fee exposure. The more professional way of describing this is where does value ultimately accrue? Does it value to token holders or equity? It's kind of bond holders versus bond holders versus equity holders when it comes to debt fights. And we see kind of this actually bounce back and forth. Sometimes token holders have more value. Sometimes it goes back to the equity holders, and it goes back to the token holders. And you just want to have both because you never know.
I know, yeah. That's what we do at Techstars. We do both, right? We get both at the earliest stage. Looking ahead to the future, Elle, back to you. What do you think for the next stage? What are you looking for investing in, say, over the next year? What are some of the signs and signals that you would point to say this was probably going to be a good investment for you?
I'm going to talk overarching. I'm really interested in metaverse and, of course, blockchain games. I think blockchain games are quite interesting because, there's this new paradigm of playing games and then, of course, owning your own assets. And I think it's a shame that a lot of gamers are still so anti-NFT, anti-crypto. I think that's a shame because there's some really interesting stuff coming out. And I'm actually really excited about the first sort of vanguard of AAA blockchain games that are coming out. So one example would be a game called Off the Grid by Gunzilla. And the founder of this is so passionate, right? He's really, really all about the gamer's experience. And so in his game, he's there will be no in-game store because we're not selling you anything. In fact, if you want an item, like a weapon or a body modification part, you can only get it by simply playing the game and harvesting it from the map or buying it from another player. And I think this Web3 ethos in gaming is very, very interesting. And of course, it will be very, very difficult for the devs to balance this open world. But it's interesting, right? And that's what makes it interesting. So I think that's something I'm very interested in going forward.
Okay, that makes a lot of sense. Looking, Nikita, at going forward, what are you looking for?
Well, so I guess just to continue with what my other fellow panelists were saying is, I think what we need is, again, like real-world application such that, in often cases, people are not too technical, and so that they could be user of this technology without even knowing that they are using it. Once the transition will be seamless, well, that will be a pretty big tick. But the other fundamental driver, which how I like to think about it, is kind of we moved from Web 1, which was just reading, like the website, like static pages and everything. So Web 2 was about reading and writing, and Web 3 is about owning as well. And so there has to be like this tokenomics, which makes sense, both in a short run, in a long run, and in between. And what we've seen is that some again, very quick and and short-term focused projects, they span out and everything, and that's just not sustainable. And so we need to develop, be it the games that are fun to play, that are good graphics, and again, that embed the token so that it makes sense. It just doesn't give you like a lot of tokens for doing nothing. It should be. You should be like almost like an equity, owner of the project, right, of the system, of the network, and you shouldn't be, getting them with perverse incentives so that you sell them, and then you just drive prices down, and you just net value extracting of the system. But we need to create some systems, be it with just more elaborate tokenomics and everything. But that aside, in terms of the real world applications, the DeFi usage and everything, it needs to rival the centralized counterparts and like centralized systems. And I think people need to do a bit of learning to really understand like what is data privacy and why that matters, because we see it time and time again. But again, that big corporations get hacked, the information gets leaked and everything. But at the same time, having MetaMask, storing your seed phrase, not forgetting about it, not writing on a piece of paper, and having it on your table, and so people need to like a bit learn those things, which again will enable the adoption and invest in projects, in startups that's really enable people to transition into Web3. I think is definitely exciting. Yeah. And that's what we focus.
Gotcha. Thank you, Nikita. And you've raised a very good point, and Elle, you touched on that as well from a gaming perspective, that the game needs to be fun, right? It needs to be fun. It needs to have that mythology. It needs to have that lore. And if you're integrating digital assets into games, whether that be avatars through NFTs or gear or equipment or skins or whatever, buying that and bringing that into the game, that needs to be fun too, right? And so you're looking, Jocelyn, like you said, at some of these and saying, for this particular instance of, say, a Web3 project that is gaming, does it need to have the token in there if it's there, right? Is it actually increasing the amount of fun that the player of the game is going to have? So great point to raise, Nikita and Elle. Jocelyn, looking ahead, what are you thinking about in terms of the future over the next year for where you're going to be investing?
Yeah, so echo so much of what Nikita just said about real world use cases, making it more seamless, easier to use crypto. You may not even know, need to know you're using crypto. It could be in the back, but you really want the user experience to be seamless. It's the only way we're going to get, in the next 100 million people to use crypto. And the other thing I'm really excited about is the power of crypto for emerging markets. So basic, but stable coins, right? Like it's such a powerful tool for people who don't have access to US dollars. And in Nigeria, to open up a US dollar account, you need like 2 references, who also have a domestic, also have a currency account. It's really difficult to get access to US dollars, and cross-border, try doing cross-border payments across Africa. It's really expensive. It's a nightmare. So USDC is a game changer, I think, for emerging markets. Also gives you access to protect against hyperinflation, devaluation, to protect us against FX devaluation. I just think that it's pretty basic, and maybe we don't have quite the same level of need, although the pound these days, I don't know, maybe my USDC is doing pretty well in pound terms, but we don't have quite the same level of need here, but I think in emerging markets it is like absolutely a killer use case.
Yeah, definitely, and I'm seeing a lot of that myself right now. In between my accelerator programs, I'm helping out with Techstars and Lagos to get their process up and running, and I'm seeing how much in the emerging market of, say, Western Africa with 420 million people, how many propositions that people are bringing forward on crypto and emerging markets, and whether that be on L1s, whether that be on L2s, it's been really interesting to see, and I think it's an incredibly big growth area. Speaking of layer 2s, Techstars has a Polygon program that we have applications open for right now. I think that's a considerable growth area, particularly around the gaming area that we talked about as well. Leland, what are you looking at going forward?
Yeah, I think for our group, we look in like a very different direction. I think we enjoy looking at very like crypto native related problems that like kind of persist. Instead of looking at the bigger picture, which we sometimes should do. But as Nikita mentioned earlier, like protocols aren't as decentralized as they actually claim to be. If we look at the recent ETH merge, like before ETH, when it was proof of work, there was say roughly like 4 or 5 big miners that represented like 50% of hash power. But after the merge, you only have really 2 big staking pools that represent kind of like half of all stake. And so now like your network is much more centralized. Initially you had like 5 actors who can control the network, and now only 2 actors need to collaborate to control the network. And so from our perspective, like these are kind of like the innate problems that kind of like persist in blockchains where like you have centralizing forces. And what we spend a lot of time on is like, what can we invest or help with to encourage more decentralization, encourage networks to be more robust instead of replicating systems we have in the real world that are more centralized.
Very good, very good. Any questions from the crowd? Anyone have any burning questions to ask of our investors? Yes, 3/4 of the way back there in the blue hoodie.
Yep. So like I said earlier, the teams should be able to ship fast while maintaining good developer practices. So not at the expense of, because especially in blockchain, right? Like there's so much money on the line. There's so much money locked up everywhere, right? All these DeFi ecosystems, chains, games, so much money everywhere. So safety is very important, but at the same time, this space is full of very smart, young, hungry people. Everybody, you've met very, very intelligent people in their 20s, early 20s, teenagers. And everybody's just, I think in this space, you get a lot of very high performing people, right? And so if you're not high performing and you're not, at the top of your form, executing fast, but while at the same time being very intelligent and, maintaining very good practices, then you will be left behind. There will be other teams who can execute faster, better than you. And this is the space where it is that competitive. So that's what I mean by, teams that are able to ship fast, because I've invested in teams that are fast and teams that are slow, and I can really see the difference.
It's a great point, Elle. I was talking to Joey Krug from Pantera about this last year, and he was talking about a Web3 project where he couldn't believe the lightning fast pace that they were shipping at, going from his very first interaction he had with them, and then even 10 weeks later. I won't name names, but he did invest in those founders. So shipping fast is absolutely critical. I got that. Any other questions from the crowd? Right here in the cap. Anyone want to take the on and off ramp? We got 2 minutes left.
Maybe I'll start. I mean, I think, look, we're partially there. We're not fully there, right? It still can be very painful. Like MoonPay is, I've been declined. I think I have very good credit. I've been declined many a time by MoonPay. So we're not fully there. I think it's actually sometimes even harder in developing markets in which they don't have the same type of banking rails that we do. We invested in a startup that does USSD on and off ramps, which is like not smartphone, it's feature phone, it's basically text-based. It's how most of Africa actually sends money. This is what mobile money runs on. So we think we need more solutions that are building for how people actually transact and doing it in a seamless, pain-free manner.
Anyone else have any thoughts on and off ramps they want to share? Burning thoughts you want to get off your chest?
I mean, I'd certainly say if you look at how the landscape did throughout the last cycle, 2017-18, we've made significant headway. Obviously, there is still, significant further progress until we can onboard more users. Some of those are related to regulatory issues in developing countries. Some of that is related to identity issues, or more so the lack of infrastructure in some cases. But I would say we are making tremendous progress, and I'd like to think, come back here next year, 2 years down the line, that we will, that will have only excelled from this point onwards.
Definitely. Like just seeing my own experience of, being able to move money from Revolut to Coinbase, buy the asset on Coinbase, ship it to my MetaMask account, and then mint an NFT with Matic, say, for example, right? Now you can actually go into MetaMask, I think with Apple Pay, and do something just as easily there. And there was at least a trial going on that. So case in point, we're getting there. Definitely, like you said, Lawrence, compared to 2017, 2018, we are a universe ahead of where we were before. So listen, I'd like to say thank you to our wonderful panelists, and thank you to the audience for those 2 great questions as well. Thank you so much for coming today. Jocelyn, Nikita, Leland, Elle, and Lawrence, thank you guys.
Thanks, good.